August Biniaz with Real Estate Investing Demystified. We're here in Scottsdale at Vertical Street Ventures conference, their second conference, I believe, and it's a beautiful event. It's a beautiful attendees, and we're with beautiful Kyle Mitchell, our good friend. Kyle, tell us about the conference. We've watched you for a while. You've been on our podcast in the past. We've interviewed you, but we've seen the growth of Vertical Street Ventures. Now you have a conference, which I believe this is your second conference. Talk to us about the current, what's happening with the market currently, the timing of the conference, and just overall what you're seeing.
Yeah, so the conference, yes, it is our second year, and really it's just about networking, getting to meet other industry professionals, right? We want to expand our knowledge base. We also want to bring other people in and help them expand their knowledge base. And so this is a great little event. We've got about 400 people here this year.
Little is an understatement.
Yeah. And it's been fantastic. Just the quality of people here is really awesome, and just connecting with every one of them has been great. As far as what we're seeing in the market, it's changing kind of every day right now. And who knows what's going to happen with interest rates. All we do know is that for us, multifamily is a long-term wealth vehicle. And so we are long-term believers and long-term investors in the space. And multifamily goes through cycles, and it's going through a cycle right now. And you just have to understand how to navigate through that cycle, which is why VSVCon is so valuable, because we bring industry experts during this time that talk about the things they're seeing, the things they're doing in the market, and different things to navigate through that market. So it's really exciting.
Absolutely, yeah. Another very important point of what you guys are doing is also the mastermind or the mentorship or the co-GP opportunities that exist. I've met a few other sponsors already who've partnered with you guys to be able to do larger deals, and then have that helping hand of people who've done lots of deals, especially focus in the Arizona market. Talk to us about that concept of co-GP, allowing newer syndicator sponsors to join forces with you to close on bigger deals.
Yeah, so for our academy, we do partner with our students, and when I first got started, the barrier to entry to get into multifamily, it's pretty high, right? It's not an easy thing to do, to raise millions of dollars, to build the relationships that you need to do, among all the other things that you do when you're actually taking down, $1 million properties, $1 million businesses. And so we wanted to break down that barrier to entry and help people get started, because we would have loved the same thing. And we did get that through mentorships, but not really through the partnerships where people actually give you step-by-step instruction as you do it with them. And so the market is tough right now. It's very difficult to get in. And so our academy allows you to break through those barriers a lot easier.
Absolutely. I want to switch the conversation here a bit as well. Aside from talking about real estate, what's happening in the economy, I want to talk about business growth in general.
Yep.
And I don't got a dog in the race here. I've known you. I know we're associates, but at some point you joined forces with Vertical Street Ventures, and the company seems to have gone hyperbolic from that time. So talk to us about that partnership that came along. I believe there was something in place initially. You came and joined forces, and the other leadership members talk about that. Talk about the importance of complementary partnerships and how that could help grow companies.
Yeah, and that's it, complementary partnerships, right? So we have different skill sets, and we bring a different thing to each department, and we bring a different thing to the table, which allows us to collectively grow and scale even stronger. And so it's just about surrounding yourself with like-minded people. And in partnerships, it's really important to also understand, their families, and do you align from that perspective? And what are your longer term goals? Because you can have two perfect partners, and one wants to get out of the business in 5 years and one wants to stay in it for 30. Well, those aren't going to really align, right? And so we've been partnering together under our separate umbrellas before we formed Vertical Street Ventures for several years. And our mission, vision, and values have aligned very perfectly, and we knew it was the right time to do that so that we can scale. Because with the right teams, you can scale and grow, but if you're separate entities, it's really tough to do that collectively. So meeting the right people has been important. Having great mentors in our lives to help us grow and combine and continue to move forward has been really important.
Tremendous. Again, switching the conversation back to general partnerships, sponsors, different titles that go, fiduciary. You know what I'm saying? There's a lot of different titles that go with this concept of what we do as general partners, right? Now, where we are right now in the current, where the economy is at, right? What is the action plan? Is it to, see what happens with the interest rate? If the deals still pencil out, is it to go ahead and start doing deals? Like, what is the thesis right now, knowing that interest rates are going to keep being increased, knowing that rents are dropping in some regions, knowing that certain assumptions that were easy to be made are not going to be easy to be made, like insurance in Florida and in parts of Texas. What is your thesis currently about coming back into the market or buying more deals?
Yeah, I mean, we're under contract on 2 deals right now. And so I've always said we're opportunistic buyers, right? We've done everything from student housing conversion to multifamily, office conversion to multifamily, new development, ground up development, and then multifamily value add. And so the 2 deals we have under contract right now are assumptions. They're fixed rate debt. One is at 2.6%. So it cash flows on day one, and there's more upside. And so that deal makes sense, right? So we're looking for different ways to break into the market. If you're just a one-trick pony, you're going to have to sit around and wait pencils down probably until the market comes back, because right now it's tough to find the right debt to put onto these deals right now, because there's still that gap between seller kind of expectations and buyer expectations, in my opinion. And as rates continue to move up, that gap widens even more. So you kind of get closer and then you kind of spread out. And so I think it's always a good time to buy, just what type of opportunities are out there, right? And sometimes you're going to have to tweak that a little bit to find those opportunities. But I feel like if you put pencils down and you're not in the market, you're going to miss the opportunity. You won't be ready when it does move. So maybe we buy less properties this year. Yeah, that's more than likely. However, we know what's happening in the market, so we can see the shifts faster, and we are ready when the market does present those opportunities, so we can be first to market.
Talking about being opportunistic, being nimble, and being agile, we just walked the property that you guys have today, which is a value-add development, which the development is taking place right next door to it. The existing asset is being value-add, so you speak it and you actually walk it. So just gotta give you your accolades for that project that we walked by. Let's talk about predictions. As GPs, again, we make some forecasts when we put our underwriting, when we put our performers in place, our pitch decks. We're making assumptions. We're making some predictions. Talk to us about your prediction. What is your prediction when it comes to debt? Do you believe it's what the equities markets are accounting for, which is going to be either 1 or 2 more 25 basis points increases, then it will flatten out, and sometimes in 2024 the rates will be decreased, and there will be a flood of buyers into the market like there hasn't been flood already. There's still a flood. So tell us about your debt and somewhat equity as well. Debt and equity predictions over the next couple of years.
Yeah, so I have promised myself I am not going to make any more Fed predictions because I'm always wrong. So I've got no idea what the Fed's going to do, but we're just keeping our eye on it, and what we're doing is we're focused on operations. The last 5 or 10 years, you could have operated a property as poorly as possible and still made a ton of money. And I think that tricked people into thinking that real estate investing is different than what it really is, and it's easier to do. But it really comes back down to multifamily is a business. You got to run it like a business, and it's all about the operations. And so for us, we're just focused on making sure our operations are as streamlined as possible, as tight as possible. We have the best teams operating our properties so that no matter what happens to the market, we are in control in some aspect. The other side of it is putting the right debt on deals. Just understand the financing side. Put good debt on your deals. If the debt doesn't work, if it doesn't fit your business plan, don't do the deal.
What is your advice there on the debt? Is it fixed rate, long term? Is it bridge, floating? What is it?
It depends on the deal.
Okay.
It depends on the deal. I mean, I would do either right now, but it really depends on the deal and the overall business plan, right? We're assuming loans. In December, we close on a bridge loan, bought a long-term low rate cap, and that works for that deal. So every deal is different. And so I wouldn't stick to one just business plan. I would go out there and try and be creative and see what works.
Got it. Getting to our last of our questions, let's talk about regional predictions. You guys are very Arizona-focused investment group, both in Phoenix and in Tucson. Is that strategic? Are you guys focused because you want to grow your infrastructure here and then expand? Or are you looking at other deals? How do you stay focused if there is shiny object from a different area that comes across your desk? Talk to us about regional focus and future plans.
Yeah, so we just launched a fund, and that fund does include the Dallas-Fort Worth market because we do have one asset there. But that's about it that we're expanding right now. Phoenix, Tucson, and Dallas. And the reason is because it is really difficult to build teams, good teams in different markets and locations. And so there are other operators who are around 10 different markets, but they've been in those markets for a long time. They've been building those teams up. And right now we've got good track record in the markets that we have. There's still room for growth, and we really love the fundamentals of those markets. And so there's no reason to continue to expand out. We're building out our infrastructure here. We like those markets for 10, 20, 30 years because of the jobs coming in, the infrastructure being built. And so 3 markets is plenty, I think, for us to focus on right now, provide great returns for our investors and still diversify.
Awesome. Thank you, Kyle. Please let our viewers know, I mean, the name is right here, but let our viewers know how to get in touch with you if they want to connect with you, talk about investing, talk about co-GP, talk about other things.
Yep, awesome. VerticalStreetVentures.com. We've got all of our information there. You can book a call with any of our team members. It also tells about the academy, the fund, all that good stuff.
Awesome. Really appreciate it.
Yep, thank you. Awesome. Thank you.